What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol SDC for Smile Direct Club. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. Now, first things first, we have not covered this one yet on the channel, and before anyone starts saying something about short squeeze this, short squeeze that, I am aware that yes, there is a high percentage of the float that is shorted, but for me personally, and if you've watched the channel before you know this, then that's just the icing on the cake. But for me, I only get involved in trades or talk about trades when there's structure that's breaking, that's going to give me a risk-friendly entry point. Again, the icing on the cake is if there's a short squeeze on top of that that really sends it higher, then fantastic, right? But that's not the sole reason that I'm personally getting into a trade. So now that that's out there, let's start off by making a daily roadmap, if you will, of obvious areas of support and resistance. So certainly noting that we still have some gap overhead that needs to close from 632 today's high up to about this 660 mark, we'll call it. So about a 30-cent gap available overhead if we can start getting closes above that daily 50 SMA. Underneath us, what else are we noticing? Certainly with the pivot low from in here, this 518, and then this shelf of support, sort of a floor, right, at $4.64. To the upside, what are we seeing above the gap? Certainly just this area right here would make a logical target, noting that we had prior support, then turned to resistance, and resistance once again at $7.37. If you had to force me to pick an area out above that, what else is there? Maybe I would argue this is probably the next area I would pay attention to at $8.71. Again, I'm not saying that the SDC Smile Direct Club here has to go all the way up to that over the course of the next day, even the next week or month. I'm just saying from a structural perspective, that's what I'm seeing from the daily time frame. Now let's take a look at the 30-minute intraday, of course. I do want to point out that there was good volume throughout the entire session, right? If we do something like this, let me zoom in a little bit further. You can certainly see that how on the Monday session here, this is well above the average of what we saw, back here the prior couple of trading weeks, right? So all things considered, a lot of new eyeballs, a lot of big momentum coming into Smile Direct Club. So let's take out the Fibonacci's, go from the low of this morning's move all the way on up to the high of the first push, right? So that's kind of in here. And where's the 38.2? Clearly the first blue line right here. It respected it in this bull flag. So that to me is extremely indicative of strong movement from the buyers and weak activity and response essentially from the sellers, right? The fact that we were able to hold that at this 575 strikes me as really important. So we'll go ahead and map that in with a regular price level right around this area. I would actually adjust it a little bit further, give it some wiggle room, and we'll remove that. And again, you can just see how that is going to be critical support going forward here. The next thing we'll do is take the fibs back out, but this time from the low of the move all the way on up to the high, and just see where some of these areas are. So the 38.2 from that, this 589, was also respected into the end of the day. You can clearly see that that lower wick bottomed out right above it, call it 590 if you will. I would argue that from a structural standpoint, though, I wouldn't, I would really look at these upper wicks at this 595, $6 just that is an area of potential support as well. So we'll remove that, and we're left with two lines to pay attention to. So what I would watch for inside of SDC going forward, the most bullish outcome, of course, would be a consolidation period here, breaking that 632 to fill the gap overhead, and then running continuation essentially into that $7.37 mark. That's how I would play that. Again, looking for the first entry point really back above today's high to get into and fill the remainder of the gap overhead, then monitor for continuation into the next overhead daily target. The next most bullish scenario would be if we pull back, that has to be your line in the sand, right? That $5.73 mark. If we do this, form a higher low, fine, do something like that, then you're looking out for, again, the same scenario, but it would have to hold this 573. If you want to be a pullback buyer, you could take a stab at it here, just looking for a little bit better of an entry point, right? So if we do pull back and we start printing hammers or, indecision dojis, basically anything that would make you question, is this pullback coming to an end? Then you flip long over the highs, get back up into some of those overhead targets with a stop underneath the low of whatever reversal candle prints. And, hopefully that would be underneath this area of support at $5.73. If we do give that up, I would say it's likely that we head back down to today's low around 518, simply noting that there's not a whole lot of structure, maybe a quick bump in the road at this prior area of resistance, which should offer some support from the top side down right around 545. But, again, patience there. That really wouldn't be the ideal setup, in my opinion, for fishing for longs, right? So those are my thoughts here. Again, if we do get some sort of short squeeze up and over these highs here, fantastic. It's the icing on the cake, but it's not the sole reason where I'm going to get involved for a particular trade. So if you enjoyed the video, if you learned something new, certainly let me know down below in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.